All right, Jeff, you can kick it off.
Awesome. Well, I want to welcome everybody. Thank you all for taking time out of your day and logging in to hear us talk. This is the fourth year that we've done this together.
Yeah, I think so.
Yeah.
Yeah, and I think it's worked out really well in prior years. So this year again, for those who don't know me, I'm Jeff Glazer. I'm an attorney at the law firm of Ogden Glazer Schaefer. Our firm does general business transactional work. My own practice is with breweries, wineries, distilleries. We represent a fair number of wholesalers, a whole lot of retailers, all up and down the beverage supply chain. So, and then we're doing this in conjunction with SVA accountants. And so we have with us from SVA, Marty and Rachel McAlexander. So they'll be talking to us later about the exciting world of taxes. And I say that because law is considerably less exciting than tax. So we will look forward to Marty and Rachel's presentation regarding the election impact on taxes. So that should be pretty interesting. We also have with us today Mark Garthwaite. Mark Garthwaite, for those of you who don't know Mark, is the executive director of the Wisconsin Brewers Guild. And he's going to talk to us today and give us a bit of a legislative update on the things that are going on, sort of behind the scenes, but in front of all of the members of the Brewers Guild, Winery Association, and Distributors Guild, or Distillers Guild, I'm sorry. So you can talk about some potential legislation that may come up in the 2021 session. I'm fairly skeptical that our legislature even exists anymore, but who knows? Maybe we might get something passed. And Mark's going to help us understand what kinds of things are important. And when Mark is done, sandwiched in between Mark and Marty and Rachel will be me. And we're going to talk a little bit mostly about distribution issues. I'm going to talk a little bit about some unique business models that are starting to show up in the distribution tier. I also want to talk a little bit more generally about just sort of getting your product out to people, and some interesting things that have and haven't worked that we've talked to Department of Revenue about, or that I've heard of people doing. I'm hoping that there might be, as we go, I would encourage questions. We're going to try to keep it to about 15 to 20 minutes per topic. So after 15 minutes or so, we're gonna sort of put an end to the questions. But as we go, feel free to ask questions. And then when we're done, I hope you'll all stick around. We're gonna try to do some networking for 30 minutes. Every 10 minutes, we're just gonna hit random on the old Zoom breakout room thing and see who we end up with and who we can talk to. So I hope you'll all stick around for networking afterwards. Thank you to everybody that registered for this. If you've registered within the last week, you probably have not gotten the swag bag yet. But if you have registered prior to this week, then you have received this sweet koozie, this sweet can koozie, which, if you remember your slap bracelets from the 80s, is a sweet slap koozie. And I want to thank Working Draft Brewing Company for that inspiration. They were awesome. I saw that they had them, so I just stole their idea. I do want to point out that the graphic that you see on there that says Ogden Glazer Schaefer was designed by one of our legal assistants. An amazing artist named Hannah Best drew our little logos there, and she was wonderful in coming up with that. So y'all should have received a swag bag, and we really appreciate everyone showing up. So with that, why don't we go ahead and get started? And Mark, I think you're first on the agenda.
Yeah, they saved the best for last, so that means I'm first. You can see it's a beautiful day here in Madison behind me. I'm hovering above the state capitol here, and I've put my lobbyist outfit on here, even though I'm not really down there all that often. I'll start off with a little bit of doom and gloom, and then maybe leave you with a tiny ray of sunshine before we turn over the mic. But obviously my focus is more on the beer and brewing industry side, so I won't try to speak too authoritatively about wineries and distilleries issues, other than to say that we're all largely in a similar boat right now with respect to navigating some pretty troubled waters in a pandemic environment.
Did we lose Mark?
I think so.
All right. Let's give him a sec. See if he
Let's
comes
get
back.
Mark
If
here.
not, we're going out of order.
Otherwise, we'll go out of order. Yep.
Yeah, I don't think we're getting them back. I'll email them.
Hey, I'm undefeated and losing connection every time I present.
You're back.
I don't know where I left off. You want to help me out?
You had just gotten started about your agenda, that it was going to be a lot of doom and gloom, maybe a
Gotcha.
ray of sunshine.
All right, we'll start out with the doom and gloom, and I don't need to review a lot of it because we're all living it, right? But obviously, earlier this spring was quite possibly, with respect to breweries, the worst possible time for a global pandemic to hit. It was right at the time. It was the breweries gearing up for the early surge in summer sales. We found ourselves in this position where we had a whole bunch of kegs of beer sitting in refrigerated coolers and didn't have any place to go with it. It was beer that's sitting in coolers that couldn't be sold. So as the summer went on, a lot of those kegs ended up being diverted to distilleries to made into hand sanitizer. And because we had all this beer that bars and restaurants couldn't sell, TTB had to relax the rules on consignment sales because a lot of that beer had to come back from retail back through distributors into breweries. And then breweries had to make a shift, at least for the most part, especially for those who rely heavily on tap rooms, have to make a shift toward packaging in cans and bottles. So they had to get pretty creative with curbside sales, drive-through sales, and coming up with new creative ways to get beer sold directly to consumers. And in the meantime, all this is going on. We're all trying to figure out how to apply for federal EIDL loans, PPP loans. It was a real mad scramble to figure out just how we could all hang on. So here we are late fall, and we're still kind of in that mode of just trying to figure out how to hang on. And I would say that's basically the operative phrase that I tend to hear from most of our members, is that we're hanging on as best as we can. So right now we're seeing at least what's going on out there from what I'm hearing is right now we're seeing a lot of the smaller breweries that are having difficulty sourcing aluminum cans. If you weren't contracted out well into the future, you're looking at deficiencies that stretch out probably well into April of next year before a truckload of cans is going to arrive at your brewery. So there are a lot of supply chain constraints that are rearing their ugly head, going right into a winter dead season, or the downside of the beer sales season. But that can situation is largely due to inadequate manufacturing capacity, and a lot of those can suppliers are prioritizing their larger accounts. So those supply constraints there are probably not going to be resolved for quite some time. As far as production goes, based on anecdote, it sounds like most breweries would tell you they're down about 30%. but that varies pretty widely across the board. And seeing a 30% reduction to this point in the year is pretty daunting when you're staring into that slow season coming up for this long, dark, cold winter we're all about to go through. So it's looking a little bit grim, and forecasting sales is pretty tough for a lot of breweries. For the legislative front, I'll just start at the federal level, where at least on the national level, the trade associations, the brewers, the wineries, the distilleries, cider makers, mead makers, the national trade associations, working with the state associations, are pushing for adding funding and reopening PPP to include allowing some of the smaller businesses that have experienced a 25% reduction in revenue that they can demonstrate in the previous 3 quarters, to have them have the ability to apply for a second round of funding. I think Marty is going to talk a little bit about PPP a little bit later in the program. We're also right now really pushing hard for passing the Restaurants Act, and I'm not even gonna, I know we like to come up with very clever acronyms, but I won't even try to tell you what the acronym for restaurants is. But that's a relief package for the entire hospitality industry that has been pushed pretty heavily. And we've been very successful at making the case that small craft breweries are certainly part of that hospitality industry. So we're included in part of the relief packages that hopefully Congress, if it does come back in the lame duck session and pushes that through, that's particularly important for the small breweries that rely pretty heavily on the taproom sales. So that bill would basically be designed to provide the relief based on revenue losses, and it's going to be targeted to a lot of the smaller businesses that are in the greatest need in the hospitality sector. The big one is, once again, we're up against the clock on maintaining the current federal excise tax rates that were recalibrated. The Craft Beverage Modernization and Tax Reform Act expires on December 31st of this year. So we're most of us staring a doubling of our federal excise taxes in the face. We've been through this before and managed to get those excise tax rates recalibrated in the 2017 Tax Cuts and Jobs Act. Again, those expire, but we are being told at least that those are very likely to be part of a tax extender package that is considered to be, and those FET tax extensions are considered to be part of a linchpin for getting those tax extenders passed. As you very likely know, Congressman Ron Kind won re-election to Wisconsin's 3rd district, and he is one of the primary co-sponsors of the Craft Beverage Modernization and Tax Reform Act. And I was on a call with him just prior to the election, and he made it pretty clear that they're pushing very hard to make those kaboom-tra rates permanent, and we've heard that before. But that is still a priority. It still has broad bipartisan support in both houses. But at a minimum, he's pretty optimistic that those will be extended in some way, shape, or form. But we'll still have to be pushing, reminding our Congress critters that this is probably the worst time in history to see our tax rates double. We're already hurting pretty badly enough. I just found out yesterday that there's a letter that's been circulating around to leadership that Senator Baldwin has just signed on to urge those the leadership in both houses to take that up as soon as possible. The last thing on the federal front, there are provisions in the CARES Act that we're pushing for a 6-month extension, which would allow the SBA to make up to 6 months of principal and loan interest payments available to assist a lot of the borrowers for existing SBA loans. So there's a lot going on right now in DC. It may not seem like a lot going on, but there is a lot of advocacy going on behind the scenes. A lot of uncertainty whether any of these packages will be taken up in the lame duck, but the tax extenders are probably most likely to be taken up. Meanwhile, in the Mary Derriere of Wisconsin here, probably the most significant development is that Senate Majority Leader Scott Fitzgerald won his race for Congress. He'll head to Washington, D.C. to occupy that open seat that was made open by the retirement of Jim Sensenbrenner. his election to Congress is probably the most consequential because he tends to align very heavily with Tavern League of Wisconsin whenever we're talking about modernizing alcohol beverage regulations in Wisconsin. So that impediment is now removed as he goes to Congress, and that roadblock no longer exists. We now have a new Senate Majority Leader in the upcoming legislative session. Last week, Senate Republicans elected Senator Devin LeMahieu as their new Majority Leader. So the good news is that Senator LeMahieu is far more friendly to us, and we have a very good relationship with him. He understands our issues. The only bad news is that I can never seem to remember how to spell his last name, but I guess if that's the only bad news, I think we're in pretty good shape. So we'll be in a much better place in the Senate. The Republicans there still have a significant majority. They gained 2 seats and they're up 21-12. So not a lot of the dynamics change there. On the Assembly side, there's not much change there either. There are 2 Democratic seats that flipped to the Democrats in the Milwaukee suburban area. But Robin Voss was reelected just yesterday as the Assembly Speaker once again, and most of that upper leadership team remains the same. So I think going forward for this upcoming session, the interesting dynamic will be keeping an eye on is the relationship between the Senate Republicans and the Senate or Assembly Republicans, and how that plays out. That wasn't always the most cordial relationship, even within the same party. Governor Evers has retained his veto pen, so that means the executive and legislative branches are going to have to cooperate to get anything done. But in order for anything to even reach the governor's desk, the Assembly and Senate Republicans are going to have to cooperate a little bit among themselves. So as far as legislative priorities, our priorities remain the same. We still have a little work to do to overcome some hurdles in the Assembly, but we feel really good about where we are with Senate allies. Without going too deeply into specifics on what type of modernization package we would see going forward, I think the goal remains to at least create more of a level playing field and some uniformity. We all know, obviously, wineries have these ridiculous 9 p.m. closing hours. We want to make sure that everything is more uniform, and that's of interest to a lot of breweries that make cider because they're also wineries too. So we want to streamline things to make some uniform regulations that are modernized, so you guys aren't always looking over your shoulder wondering what it is that you're supposed to do to comply. With that, I'm happy to entertain any questions. There's not a lot of specific legislative things that I can talk too much about, but I'm happy to address anything if anybody's got questions.
I thought that was really good. Thank you for the overview.
Fire away, Jeff.
Wow, this group is quiet. I didn't expect that. Maybe they need a few more drinks in them or something. I don't have any drink tickets for you guys. Otherwise, I'd be happy to.
We just got a question via chat there.
Oh, hey, look at that.
I'm seeing it. So Peter Schrader's asking if we've heard anything from the states surrounding us. I guess every state's legislative schedule is a little bit different. One of the things I didn't really touch on too much was obviously in a pandemic environment, the urgency on or the desire to do delivery or direct to consumer sales has been a priority for a lot of our members. That's very unlikely to occur here in Wisconsin. Neighboring states do authorize it, at least Illinois and Iowa do. That's a what's that? Michigan does?
Michigan has retail deliveries. Yeah,
retail delivery. That's right. I think Jeff will touch on a little bit more on some of that stuff. That's to do that here in Wisconsin would be a very heavy lift. I'll just tell you that right now. But there is a lot of interest from a lot of members to have those options. What I will say is what we hear from breweries in other states that had new authorizations. Some states have liquor control boards that'll let you that have the authority to change rules on the fly. And what we've heard from some breweries, with respect to direct delivery to consumers is that it's not very profitable. So keeping that in mind, I think we're kind of setting that aside as an issue when we discuss any legislative proposals for making changes in that direction.
Mark, are you hearing any like flipping allegiances? You know, I mean, the delivery question is an interesting one. Traditionally, for example, the Tavern League has been very against delivery, but I have to imagine that their position may be coming around on that issue.
That's hard to say. So what's interesting is that the executive director of the Tavern League of Wisconsin retired, but what we're hearing is that he was gently nudged out the door. He's had a long and successful career there, and there's a little bit of fighting over who's going to take over that new position. But their official word is they're opposed to any delivery, and I think that's largely because they don't want to open the door to retailers delivering, because that opens a whole nother can of worms in terms of interstate commerce. But I think the one thing that they would like to do is be able to provide cocktails to go. You know, that's, you know, maybe that's something where there's a give for them or a get for them that might get them to go along with helping us get something across the finish line. But with respect to allegiances, I would say that there's daylight between beer wholesalers and Tavern League of Wisconsin, which didn't exist before. That's an interesting dynamic that will be I will be personally very interested to see how that plays out, because typically you see very tight alignment between wholesalers and Tavern League, and we're off to the side. There's daylight between those two tiers now that I think we have an opportunity to occupy a little bit of that space. We do have very good relationships with wholesalers now. There's been a change of leadership at their on their government affairs side of things, and we have a much better relationship there.
All right. Any last questions before we move on to the next one? Thanks, Mark. Really appreciate the insight. Thank you. So for the next piece, I'm hoping we have a lot more questions, because I don't know that the content that I have to deliver is going to take 20 minutes. But I really wanted to have a conversation in the next 15 to 20 minutes about some of the things that Mark was talking about, and you know, how are you getting product to end consumers in an age where tap rooms and tasting rooms are significantly being significantly reduced. So I want to go over a few things that I've run across over the past, we'll call it 12 months, or at least some trends that we've seen in the market. Some interesting things that are going on that I think bring a ray of hope. I will say that I think in general, liquor and grocery stores continue to be a challenge for craft producers for a variety of reasons. The biggest of which you're all aware of, which is that, you know, Budweiser, Anheuser-Busch, the major producers and distributors sort of have those shelves locked down. So it sort of makes grocery store a challenge, but not impossible. So I want to start with one of the early victories I felt in COVID. Back when we first went into lockdown, there was a lot of consternation over whether craft manufacturers, whether breweries, wineries, distilleries, were even going to be able to stay open at all. And one of the great early victories I felt was online ordering from Department of Revenue. We were able to get some really good, some really nice interpretations out of Department of Revenue that said that as long as you can order online and provide the proof of the purchase in person when you picked up the alcohol, that an online order could constitute a face-to-face sale. And this was, I mean, I think this is something that we had sort of been floating around with Department of Revenue for the last few years, and they'd never really wanted to give it too much serious consideration. And I think the pandemic sort of forced them to confront this much faster than they wanted to. But the reality is that it got us to a good place, which is that we can at least have online ordering. And while we can't have shipping, right, people still have to come to your physical location and pick it up. Theoretically, they're supposed to be showing proof of order, so they should be showing you some sort of receipt or order slip showing that the product was ordered, probably an ID showing proof that you're over 21, that would constitute a face-to-face sale. And I think that's been, I think that has been really, really helpful for a lot of people who are on this call and a lot of people who aren't on this call. So, so I really appreciate the Department of Revenue being flexible on that. Having said that, one of the early losses that we had was an open question about whether the wine shipper's permit allows a winery to ship wine other than their own. Right? Can you ship wine? Can you ship wine under a direct wine shipper's permit that you did not manufacture? And I have and would have argued to Department of Revenue that that's not clear in the statute, and that because it's not clear, there's no reason why they shouldn't. If the winery has a direct wine shipper's permit, it allows them to ship wine. There's nothing that says it has to be their own wine. And in fact, it sort of gets to some absurd results if you say that it's not, given some of the prevalence of contract manufacturing on the wine side of things. I don't want to get too far down the contract manufacturing rabbit hole there, but needless to say, Department of Revenue has decided that the direct wine shipper's permit does not permit you to ship wine other than what you have manufactured. So if you hold a direct wine shipper's permit, you can only ship your own wine or wine that was manufactured by you. So unfortunately, we didn't get that one. There was a question: what is the chance online ordering will disappear after all of this? From Erica over at Giant Jones Brewing. What are the chances that online ordering will disappear? I think very slim. I think I look around the world, or I look around the universe as we know it, right? And online ordering is very popular. I think it's going to continue to be very popular. The basis for their agreement to online ordering for Department of Revenue was not based on the pandemic. They gave a reasoning and logic for why they are permitting it to happen that was sort of independent of the exigent circumstances or whatever you might want to say about COVID. So their guidance on it was not, well, as long as everybody's having problems, we'll say yes, but then we'll revisit this when it all goes away. That's not what they said at all. It was, we view this as a face-to-face sale, that this counts as a face-to-face sale. So I don't anticipate that particular piece of these things going away. So that was a good early victory. We had the sort of early defeat on the wine shipper's permit. I want to talk a little bit then about some distribution arrangements that I've seen cropping up. I'm not going to mention distributors by name. I mean, I'm sure many of you know who these people are, but I don't want to get too deep into the you should use this person but not that person. Just want you to be thinking more broadly about some of the relationships that we're starting to see develop at the distribution tier. because I think there's been some really interesting innovation. There's been some pretty interesting innovation happening at the distribution tier. First of all, one of the sort of simplest innovations that we're seeing at the distribution tier is simply what I would call limited distribution. And this is sort of limiting the factors of distribution, right? So you can engage a distributor to sell a single brand of your beer. If you don't want to open up your entire portfolio to the distributor, you can just have them distribute a single brand. And in fact, we're seeing that extended to even a single location, right? If you can engage a distributor that will just deliver your product to one particular restaurant or to a small handful of particular places in foreign jurisdictions. This isn't even just here in Wisconsin. So you can get functional nationwide coverage from these distributors that sort of fill in the gaps and work with pretty much anybody that wants to come. And the way that, and then the other way in which you can work with distributors in this limited distribution model is on a limited term. I only want to have my product there for some short period of time before I only want you to distribute my product between August and September, for example, and then it goes away, and then I can use whoever I want. So limitations on the brands, limitations on the locations, limitations on the terms. And the way that this generally works is that these distributors are engaging with other distributors. And so so when you hire this distributor that's going to, you have the way this normally comes up is somebody maybe has a friend, cousin, uncle, whatever that owns a bar, restaurant, venue in Washington, California, Nevada, New York, wherever, and they want to be able to sell your brewery, winery, whatever product. But you don't want to go through the hassle of getting a distributor in the state of Washington. So you can engage with one of these limited distributors. And the way it actually works is that they send a common carrier to pick up your beer, and they either use a network of common carriers or they use a network of distributors that they have contracts with. So they might have contracted with a distributor and said, hey, we're going to have this product that we need you to deliver from point A to point B once we get it into the state. And then that distributor will distribute it on their behalf. So they're contracting with other distributors in order to get your product around the country. And it's turned out to be pretty effective. I've heard that it can be maybe a little slower, but it gets your product from point A to point B very quickly. And it allows you to sort of tailor the things that you want to get into those places. So it can be a single brand, right? You have one particular product that's in high demand. And so how can you get that out as much as possible? Or you have a particular niche product that just happens to have a very niche demand. Or you're trying to ship it in for a particular event or for a particular time period in order to match up with something that's going on locally, right? So there's a whole lot of reasons why you might want to be able to engage in this sort of limited distribution. And the good news is we're seeing some real innovation in the distribution tier for accommodating that. The second major shift that we're seeing in the distribution tier, and I call it innovation, but really it's really just sort of being more supplier friendly. It's a recognition that suppliers, particularly suppliers at this scale, not necessarily at much larger scales, but at this scale, suppliers are already doing a lot of their own marketing. Right? They already have their own people who are going into retailers and trying to drum up their own business. They already have a person with boots on the ground, maybe two people with boots on the ground that are going in and working in partnership either with a distributor or with their, or as self-distribution if that's permitted for a brewery. But the reality is even working with a distributor requires you as a small producer to have your own sales support staff. So there are distributors that are starting to recognize that and say, hey, look, that means we don't need to have a sales support staff. We don't need to have people on the distribution side that are going to go into stores and try to sell product. We're just going to sell product that the store orders, and you have to go in and drum up your own business. But if you can get the store to say, yes, we'll deliver it from point A to point B. So really, they're just trucks and drivers. And the savings that you see in that is that you're able to capture much more of, you're able to capture much more of that distribution margin by using a distributor that doesn't have this huge support staff, because they don't have as high of a distribution cost for getting your product from point A to point B. So they're able to pass that savings on to you while maintaining the retail price point to the retailer. So often the way that this works is they still charge a full markup from your product to the retailer, but then they're able to share that with you either through primarily through paying a higher price for the beer from the supplier, even though they're keeping the price to the retailer at the same price. So those are some of the major innovations that we're seeing. I want to talk a little bit about distribution in general, because a reminder that at least for now, if you're a winery, you can't both use a co-op and a distributor. So that might prevent you from taking advantage of some of these tactical distribution issues, or some of these tactical distribution options, because you're using the co-op. And if you're using the co-op, you can't also have a distributor, unfortunately. Get distribution contracts in writing. These are required at the brewery level, but I will tell you that some of the problems that I'm seeing at the winery and the spirits level could be solved if these contracts were in writing. And the distributors will tell you they don't need to be in writing. The distributors will resist having those in writing because they don't want them in writing. They don't want to have performance goals. They don't want to have people checking up on them. They don't want to have to manage the contracts. And the statute doesn't require them to have contracts. But I can tell you that by having those contracts in place, it's going to make it a whole lot easier to hold the distributor to doing what they tell you that they're actually going to do for you. So all of this is then there's also another reminder on the wine and spirits side that unlike beer, wine and spirits distribution arrangements are not exclusive. They don't have to be exclusive. Now, the distributors will tell you otherwise. The distributors will say, well, hey, if you're going to use that other distributor, then we're not interested. But I don't know that that's always true. I think you're going to be able to find distributors who are looking for new brands, particularly brands that are willing to go out and do some of the legwork on their own. It's basically free sales to them. And so the advantage of this is you can use a network of distributors around the state. You don't have to rely on a single distributor for the entire state. You can rely on a network of them and maybe even play them against each other. Whoever does best, then you pull your product from one and give it to the other as you see fit. But a reminder that wine and spirits distribution relationships are not required to be exclusive. And so if your distributor isn't doing what you want them to, pull your product from them. If they're not acting in your best interest, then go find a distributor that will, or take advantage of one of these tactical distribution capabilities. So that's what I had. Anybody have any questions or thoughts about distribution? Anything that you guys have seen out there that I haven't talked about that you thought was interesting or cool? Any questions that you have?
I'm going to jump in quick on a comment on the online sales.
Yeah.
And what DOR has said. I don't know if anybody's on here that had this experience, but I know typically before we do these, you and I have an opportunity to just sit down and chat a little bit. Obviously, we can't do that as freely as we normally would, but DOR has backtracked a little bit on some of that stuff, at least with regard to the specifics of the online payment protocol, because they really misunderstood the issue with respect to online ordering, and what they previously said was that as long as the actual, so the example of a credit card payment is the credit card payment is captured or authorized. I always forget which way it goes. It's authorized and then captured, and you can delay the capture. And what they want is that you can authorize that payment in advance, but you can't actually capture it until after or at the time the customer arrives or after the customer arrives. So that's basically what they said was okay. When we went through this whole very detailed written protocol, how we were asking them, is this okay? And they said, yes, it's okay. They came back because someone had complained that a brewery was selling beer online. And they came back and told that brewery that they couldn't do that. So the brewery starts, asking questions like, but you said this was okay. And it turns out they were misinterpreting the actual mechanics of the credit card transaction. And here's where that's kind of tricky, is because a lot of small businesses use Square terminals, right? And Square doesn't allow you that option. So a lot of credit card processors, you can set it to say, yeah, get their credit card information, but don't charge it yet. And then once the customer picks up, then you hit charge. DOR says that's compliant. Square doesn't give you that option, unfortunately. So there's no way for a brewery to really, or winery, distillery, whatever, to do that delay if they're using Square. So just as a cautionary tale, if you're using a payment processor that doesn't allow you to later capture those funds, theoretically, DOR could say that you're being naughty. Nobody's probably going to do anything about it unless somebody complains. But somehow some brewery had somebody complain that they were selling beer online, and they basically had to kind of come up with a new system of capturing payments for online sales. So
lame. So,
typical DOR.
How would DOR ever know like what credit card processor you're using and whether you captured or delayed the fee?
Well, they wouldn't. See, that's the trick. So basically is like you tell them, well, there's a button that I push to say that the transaction has been redeemed. They probably don't know. And really, they're not going to actually look into it. And this is where it's all so silly to begin with. Like, who cares? The person is coming to the premises, and face to face, you can check their ID. I mean, that's the whole idea of the face-to-face sales, just to make sure that ID is being checked and that nobody's mailing beer all over the place. So they're not going to know, to be honest with you. But of course, I can't tell anybody, and you can't tell anybody to lie to the DOR. But the most frustrating part of it was that when I explained how the credit card transaction works and that a lot of breweries use Square systems, the people we talked to, you and I typically talk to a DOR, had no idea what Square was, right? So we're trying to talk about how the modern world conducts commerce with people that have no idea how it actually works. That's frustrating. So when we're talking about these silly semantics of when you actually capture the funds, that's the kind of stuff that we hope legislatively to clean up, because I think all of us on here know how, it's just how commerce works. You know, we capture payments online, and Chapter 125 never even contemplated the existence of the internet, and we're still stuck with it.
All right. Amanda Kroner, you had a question about distribution and tax. And this is hitting all the.
So it's actually Adam, it's
spots.
not Amanda.
Oh.
I'm here though.
So as we've been going into additional states, one thing that we've seen from a distribution that's interesting is that a lot of the beer distributors are picking up liquor, just I think more from the RTD perspective. But you know, with our journey, one thing that we've been seeing a lot is the difference in tax models from a state perspective. So if with us being a distilled spirit in Wisconsin, if I'm 1% alcohol or 99% alcohol, I'm taxed the same at the state excise. But in the state of Florida, if I'm 14%, less than 14% ABV, even as a spirit, I'm getting taxed as a wine. Have you seen if there's any look at changing that type of perspective or laws in the state of Wisconsin?
I would not expect to see sort of tax state by state tax reconciliation anytime soon. I don't think every state has very different reasons for why they tax alcohol in the way that they do.
Is this Canada?
So I don't have any good answers for that. You know, maybe our tax folks can help out a little bit, but I don't see any good solutions to that on the horizon, unfortunately.
No, I'd agree with you. There's too many competing interests, and I would be shocked if some sort of reconciliation happened there.
Gotcha. Okay.
Unfortunately.
Thank you.
Yeah. All right. Any last questions? And then we'll pass it on to Marty and Rachel. Excellent. All right, Marty and Rachel, go for it.
All right. Hi, everyone. I'm Rachel McAlexander. I've been with SVA for about 12 years, working mostly with closely held businesses and their owners, primarily in the manufacturing industry. Today, we wanted to go over some tax credits that might be beneficial, some accounting method changes that you may or may not know about from tax reform. Marty will go over the PPP loans and some potential tax changes with the Biden administration. So the first tax credit I wanted to go over with you guys is the research and development credit. This is one of those credits where we ask clients if they have any research and development expenses, and oftentimes the first answer is no. But when we start digging a little deeper, we find that there actually is some expenses that can be taken. And this credit is worth about 10% of qualified expenses, which are generally wages and supplies. So if you are developing new recipes, new brews, then whatever wages or supplies that go into making that new brew, that would qualify. If you have improved any of your processes, for example, maybe you've improved a canning line so it's more efficient, time and materials that went into that would qualify as R&D. And then if you're packaging your bottles, you've redesigned those to be more sustainable or to have a longer shelf life, that time and material would qualify as well. However, just updating your label, that's not going to qualify, unfortunately. For R&D, you can apply that credit to your payroll taxes. So if you have a down year, like potentially this year is for you, that would be another alternative. This credit can be carried forward for 20 years. And if you're listening to this and you're thinking, well, I had a whole bunch of R&D in the past 3 years, but I didn't take the credit, you can go back and amend the last 3 years of your tax returns to take that credit. If you're unsure if you've taken this credit, take a look at the slide up here. And we've put the form and line number where you should be able to find the information if that tax return was taken in the prior year. The next credit is the work opportunity tax credit. This is available if you've hired any individual from a disadvantaged targeted group, and the credit is worth about 25 to 40% of their wages. These members of these groups could be summer youth employees, veterans, long-term unemployed individuals, or any individual that might be taking advantage of federal assistance programs. In order to be eligible to take this credit, you do have to apply or fill out a pre-screening notice and send that to the Wisconsin Department of Workforce Development within 28 days of hiring that individual. And the last credit, but very important credit, is the Wisconsin Manufacturing Credit. This credit has the ability to essentially wipe out your Wisconsin income tax. In order to take this credit, you have to be assessed as a manufacturer for property tax purposes. If you're not assessed and you think you are a manufacturer, it is worth looking into. However, I will say if you are a brew pub and a restaurant is a major piece of your business, chances are you will not qualify to be a manufacturer. All of these credits can be carried forward. So if you have a year that you have a net operating loss or no income, those credits can be preserved for future years. All right, so accounting method changes. As a result of tax reform, we had a couple of accounting method changes made available, more widely available. Now, if you are a business with less than average gross receipts of 25 million, you are eligible to make any of these changes. One being the accrual to cash method of accounting. Being on the cash method of accounting is advantageous because it provides you a little more flexibility as to when you're going to recognize income or expenses. When you do make that switch, you may end up recognizing income or having a large deduction. That just really depends on the state of your accounts receivables and payables. It could be a good planning tool. If it results in a deduction and you have a year of income, that can wipe out some of that income. Or if you have a down year and making that switch is going to create income, you can make it go the other way. And the second accounting method change is in regards to inventory. This change allows you to expense your overhead costs. So essentially the only inventory costs that you need to capitalize are those direct expenses, those non-incidental materials and supplies. And this can create a very large deduction if you have beverages that are being aged for more than a year. And it might be a good planning tool if you're like a lot of businesses this year that income is down or at a loss. This could create a loss or make even a larger loss that you could carry back to a year that might have income and get you a little bit of cash. You can carry back net operating losses from 2020, but as of 2021, you can only carry those forward. So depending on your situation, you might have some flexibility on what you do with those accounting method changes. So that's all I had, Marty. Marty, if you want to jump in.
Sounds good. Thanks, Rachel. I'm Marty Mathias. I'm with SVA as well. I've been there about 20 years or so now and work with a lot of people that are on this call and in the industry. Rachel and I both enjoy it. So just putting it out there to begin with too, we're always happy to take a call. If something's on here that sparks some question, feel free to send us an email, give us a call. We're happy to talk to you about any questions that you might have. And also going back to Rachel's comment on the inventory change. That really is a huge win for specifically wineries and distillers that are aging, because you're essentially able to expense inventory now that you won't be selling for 2, 3, 5 years. So as your business is growing, you're taking a bunch of expense now where you're not recognizing that income until later. So if that applies to you, I'd highly suggest looking into it. I'm going to cover a couple things here today. First is the PPP program, just giving an update there, and then talking about what potential changes we're seeing on the horizon with President-elect Biden's agenda. So the PPP loan, I'm guessing most people on this call probably got it. It was a mad rush to implement. They didn't really have much time to think it through. So now we're at the time of applying for forgiveness. What I can say is that since May, June time period, it seems like the SBA and the government and the banks have all gotten a lot more friendly with this, and it seems to be getting easier and easier to apply for forgiveness. So especially the smaller loan amounts, I think it's down to 1 page now. I'd recommend that when you're applying for the forgiveness, to see if you can just qualify with it using just your payroll costs. There were other eligible costs that could be included in there, such as rent, utilities, things like that. But we've been seeing if you can just limit it to the payroll, and that gets your full forgiveness amount, just submit the payroll. Otherwise, you're going to spend a lot of time going back and forth with your banker, providing leases, providing copies of canceled checks, utility bills, all of that stuff. So try to keep it simple there. The biggest thing right now is the taxability of these loans. When Congress came out with this, their intent was that these loans would be tax-free. The forgiveness would be tax-free. That was all fine and well until the IRS got their hands on it and said, that's great, but if you're going to do that, then you need to modify the tax code, because the current tax code does not provide for that. So we're considering that loan essentially taxable. That still hasn't been resolved. From what we're hearing, Congress still is looking strongly at saying, let's modify this. That wasn't our intent. And if they don't do it, I mean, there's going to be an awful lot of businesses that money's gone. They paid it out. It's not there. So to hit them with a 30% bill on it, the money's just not there. So they're going to have to at least address it, but they're not obviously very quick in doing so. So when you're applying for forgiveness, right now I've been recommending that clients push that off a bit, and a bit meaning 2021, just because I'd like to have that flexibility to have or find out when they're going to address this taxability. The other option is if you already filed for forgiveness and you get it's forgiven in 2020, I'd be looking at extending your tax returns at this point so that we can get Congress to address it, because as of now, it would be taxable. You'd have to pay the tax. If they change it later, you could go back and amend, but I don't think anybody's going to want to send out a bunch of money that they don't need to. So I'd look to deferring that until 21 if you can. And then just a few quick points on what we're seeing or expecting from President-elect Biden on his new tax agenda. I think it's fair to say that taxes will be going up in the future. We're going to have to pay for all of the PPP loans and the budget deficit somehow. And Mr. Biden didn't shy away from saying who he's going to tax and how. So really, he's looking at taxing or getting implemented taxation of the wealthy, which in his terms are over $400,000 of income a year, and the ultra wealthy. So he's trying to leave the middle class and lower class alone and not raise rates there. So that's a good thing for most of us. I would expect that any corporate tax rates would also go up. During the last tax reform, the corporate rate at the federal level dropped from 35% down to 21%. I would expect that they'll be looking at addressing that and getting the amount back up there. The other thing that came through in the tax reform that probably applies to most of the people on this call is the qualified business deduction that allows you to shelter 20%, essentially 20% of your federal income from your business. That was really kind of the trade-off when the corporate entities got their tax break. This 20% deduction allowed flow-through entities to get a similar tax break. But I would expect that he will be looking at that and saying that's a potential revenue source for the federal government, and that I would expect that will be strongly looked at. He is going to be looking at eliminating capital gains rates, again, targeting the wealthy. Not a lot of people are going to be impacted by this unless they got significant investment income, buying, selling stocks. So right now, those are at a preferential tax rate. He'd be looking at bringing that to an ordinary income tax rate. And finally, the last thing is really related to longer term planning. Is we're expecting that the estate tax limit will be reduced significantly. Right now, it's at like 5.6 million per individual. So there's not a lot of people that have estates that are taxable. If your estate is below that amount, you're not subject to the tax. They're talking about dropping it down significantly or eliminating it. So what we're seeing in response to that right now, in anticipation of that is going to happen in some form, is we're seeing a lot of gifting occur. That people are valuing their business right now, and they're gifting it to their children. If they've got employees that they want to enrich a little bit and give them some ownership, they're doing that to help get the business value out of their estate. So we're seeing a pretty significant increase in the demand for valuation. So that's all I had on the PPP loan and tax. Is there any questions that I can answer for people, for Rachel? Pretty exciting stuff.
You did such a great job.
Yeah.
Nobody has any questions about taxes, Marty, because you and Rachel did such a great job.
Yep.
Hey, Marty, I'll throw one out there. Just on the moving target of how PPP forgiveness and things like that go, and how the moving target of how IRS views the taxability of the forgiveness. Is that in your world? So like in my world, our advocacy is through our national trade associations. Do you have that kind of advocacy that who is, and here's where I'm going with that is like, I like to know when my weakness is that I don't know the business side of my brewers as well as I should. And when we're talking about a lot of these taxation issues, especially when we're talking in a world where things are a moving target, I don't often hear about what I need to communicate up the chain for the purpose of advocacy. So I'm curious about how that works in Marty's world compared to how that works in my world.
Yeah, so our strongest lobbying interest in terms of tax clarity and things like that is our American Institute of Certified Public Accountants, or the AICPA. So I was just on a call with them this last week, and they said this is at the very top of their agenda. They're working with lawmakers, with Treasury to say, you've got to provide clarification here, because right now nobody has any idea what's going on. So AICPA is a good resource. Basically the U.S. Chamber of Commerce lobbying group as well is a good source there too.
So the reason I bring that up is like that's a reminder of everyone to talk to your accountants and let them know these things. Talk to your industry trade associations so they're both communicating that information from multiple directions. So lawmakers at the federal level are keenly aware of what it's like to be you.
So this is Erin from OGS, and I definitely agree with that. The Chambers of Commerce, especially the U.S. Chamber of Commerce, has been pushing on us because the regulations aren't just coming from the IRS, but the Small Business Administration, and they are making changes. They just made changes last month about the PPP loans and buying and selling of businesses. And so they are actively changing the guidelines on the PPP loans even now. So talking to your lawyers, your accountants to know what is actually happening with those guidelines now, your banker. So the bankers have been calling us, asking what to do. And then knowing who those lobbies are. As Marty's pointed out, the U.S. Chamber of Commerce is pushing to try and get some better guidelines that are more friendly to businesses, because right now the regulations have not been doing a great job of following the intent of the statute, in my humble opinion.
Completely agree.
So Marty, do you really think that they're going to get rid of the LLC sort of tax parity bit? You really think they're going to let LLCs and C corps get that far apart on taxes?
They're not that far apart right now. I think what'll happen is they'll bump it back up to pre-Trump tax reform, and that corporate rates will go to 35%.
Oh, you think the corporate rates will go back up too?
Yeah, I absolutely.
Oh. Cool. All right. Well, that's I think, I mean, unless there are any other questions, that's the presentation for today. So I hope everybody managed to learn a thing or two. I know I learned more than 2 things, so I'm pretty booked for I'm pretty set. We're going to stick around for some networking. So hopefully everybody's going to stick around, turn on their microphones, and take a bit of networking roulette with us, and stick around and hang out for a bit. But thank you all so much for being here. We really appreciate it, and hope to see you all here for the networking.
Yeah, and
if you stick around, I'll share a little bit more dirt.
To follow up on Jeff's comment too, we really enjoy doing this presentation, and I think we've got a good thing going. But if there's anything that you guys would like us to address in future presentations, by all means, do so. We kind of default to what our daily life is, but if there's anything else you'd like us to cover, we'd love to get the suggestions.
Yeah, great.